The best of money matters. Wealth Tracker.
Welcome to the Wealth Tracker, where we dive into the uncharted territories of niche investment strategies that promise to redefine wealth. Hello, I'm Hongbin Jeong. A new token is making waves in the crypto space, and that's the Hype token. It has risen over 600% since its launch, pushing the total value of the airdrop to 7.5 billion US dollars. But this recent boom in the token may just be the catalyst of ushering in a new era for cryptocurrencies. The main difference between Hyperliquid token and other cryptocurrencies is the listing. Hyperliquid token saw a decentralized launch, which excluded venture capital firms and early investors. Now, other cryptocurrencies typically launch on centralized exchanges. So what does this mean? And will we see more cryptocurrencies being launched on decentralized exchanges? And what will this shifting landscape mean for cryptocurrencies? Well, to find out more, joining me today is Carney Mak, who is a Chief Strategy Officer at Tokenize Xchange. Carney, welcome to the show.
Hi, Hongbin. Glad to be back.
Thanks for joining me, Carney. Well, there's a new token in town, Carney, that everyone's been raving about, and that's Hype. For some context here, tell us more about the Hyperliquid token.
Okay, Hyperliquid is a decentralized perpetual and spot exchange that operates on its own layer 1 blockchain. The platform focuses on providing deep liquidity, low fees, and good user experience for their traders. Hype, the platform's native token, was launched through a community-first airdrop, with 31% of their total supply distributed to early users. Since then, the token skyrocketed over 600%, bringing the total airdrop value to 7.5 billion. And this is a strong testament to its strong market demand and community engagement.
Well, you know, the Hype token has risen over 600% since its launch, pushing the total value of the airdrop to $7.5 billion. Now, Hype hits new highs again and again. So what is the market optimistic about? What's all this hype about?
This is very different. Okay, the market is optimistic about Hype due to its unique approach of token distribution, which prioritizes community involvement and transparency. The strong price surge is seen to be a reflection of the way Hyperliquid gets listed, which is community first and avoids the pitfall of traditional VCs-dominated token launches. So investors are excited about its decentralized exchange launch and a fairer distribution of tokens, leading to its sustainable interest despite the broader market challenges.
I see. I mean, Hype has bucked the overall downward trend of the market here. Is Hype setting a gold standard then? Is this the next Bitcoin?
Hype is certainly challenging the status quo. It's setting a new benchmark of fairer token launch. Generally in the previous time, it's all about VCs coming in early stage. Then when they get listed, the VCs kind of come and dump it. But with Hype, they changed the whole ball game that you don't need the VC to be successful. So they go for a three approach model, whereby first they do community first approach, whereby they create a standards or for equal distribution. Meaning that you come in now, you're not worried that the venture capital will dump on you. Okay, second is a self-sustaining model, whereby unlike other projects that rely on VC funding, Hyperliquid relies on their organic growth and real product market fit to make sure that it's how they sustain the price and even the company. And last but not least, the momentum. I think what they did was not only to share that in a bear market they can surge up. It shows a lot of market confidence. It also shows that in a long time, right, as long as adoption, right, the price will still maintain. While it's still early, Hype has proven that decentralized projects can thrive without traditional VC funding.
Well, let's dive in further about Hype's listing here. I mean, amongst all this buzz around Hype, Hyperliquid's public listing mechanism has caused heated discussions. What was Hyperliquid's public listing mechanism, and how does it differ from other tokens listings?
Okay, in general, like I mentioned just now, that a lot of token projects, right, they get VC backing, then they pay exchanges, centralized exchanges like Binance, a discretionary fee to get listed. And sometimes majority of their fundraise goes to the listing fees. But Hyperliquid did not follow this traditional model. Instead, they just launched exclusively on their own decentralized exchange, allowing a fair price discovery from the community. Okay, this is different, and especially if we set aside all the required large listing fees and insider allocations to venture capital or institutional investors, everything is to the community, and then this generate a lot of hype into the whole retail market.
I see, I see. Well, then how does this highlight some of the big issues with the way tokens are listed on exchanges? I mean, what should investors take note of, Carney?
I think that the Hyperliquid launch has highlighted several issues with traditional token listing, particularly with inflated valuation, high listing fees, market manipulation, market makers that often happen during when you get listed on centralized exchange. These practices can leave retail investors at a disadvantage, and with insiders and VC profiting while retail investors face a significant price drop. Okay, investors should be cautioned about the token allocation models and the potential for price manipulation, especially on exchanges that prioritize insider interests like VCs over community participation.
I see, I see. Well, with one of the issues being listing fees, is there always a dispute over these listing fees? I mean, can this be resolved?
Yes, so like all centralized exchange, all they want to make money by getting good projects on board with good listing fees, with good trading volume. So these listing fees have been a major issue or controversy in the crypto industry, whereby some projects pay up to close to 5 million to get listed on, the big centralized exchange, which creates unfair barriers. This leads to disputes and projects finding it tough to list their tokens without a heavy financial backing. While centralized exchange listing fees won't disappear, the rise of decentralized driven launches could reduce the reliance of the costly centralized listing.
Well, let's dive in further about this decentralized listing. I mean, one key thing to note is that Hyperliquid token was launched on a decentralized exchange, as you earlier mentioned, Carney. I mean, in contrast with the Hyperliquid token launch, other cryptocurrencies are typically launched on centralized exchanges with an allocation to VC firms and early investors. So, what's the main difference between centralized exchanges and decentralized exchanges?
The main difference between centralized exchanges and decentralized exchanges lies in the control and operation. The centralized exchange are managed by centralized entity that controls the platform, impose listing fees, and prioritize VC involvement and so on. But what happens is the centralized exchange is majority of them are regulated in their own jurisdiction. In contrast, decentralized exchange operates more of a decentralized manner with transactions occurring peer to peer and listing decisions made by community, providing a more open and transparent environment for token launch. However, they are not regulated.
I see. So, why did Hyperliquid list on a decentralized exchange rather than a centralized exchange? Was this the main reason behind Hyper's boost?
One of the things that I felt that was because they created their own decentralized exchange, and why not better than list on their own? In this way, they are able to offer a fairer distribution to the community that used their platform on start, which contributed to its success. This move was most likely a key factor behind the token's dramatic rise, as it helped align the token projects with the interests of the broader crypto community and attracted a stronger, united base of retail investors.
I see. Well, then could centralized exchanges learn from decentralized exchanges?
Yes, I think we after the hype token launch there were a lot of like key stakeholders in the crypto space, including CZ from Binance, have mentioned that we should learn from this launch and how we can learn from decentralized exchanges, in particular the fairer token distribution, maybe how we do due diligence on listing, or maybe even the lower listing fees and greater transparency. By adopting some of the principles, what we see is a truly decentralized community on a blockchain such as then we will get more community investment and focus on equitable access. Then this way centralized exchange could improve the token listing process and build a stronger, more sustainable relationship with projects and their retail investors.
I see, I see. And before we let you go here, Carney, then does this now change the cryptocurrency landscape? I mean, will the cryptocurrency listing landscape change? And how will this change impact crypto prices moving forward?
Yeah, I think this is an evolution. I would say that this year there's a lot of good launches, good projects launches, including Hyperliquid. But some of the ones that are really heavily BC backed, right, did not perform as good, or if not 50% as good as Hyperliquid. The reason is because they list it at a high valuation before it all comes down. Okay, but what Hyperliquid does is the retail community choose the value, choose to be involved in it, and then they decide how big or what's the demand of Hyperliquid, and this way challenge a traditional listing approach. So this potential impact is significant in the market. A lot of projects have pulled out from applying for listings on the centralized exchange just to go DEX straight away, reducing the reliance on VC funding, offering better opportunities for even retail investors rather than leaving them aside as exit liquidity for insiders. So this shift have changed the mindset of projects coming in to the DEX, having a lower sort of barriers to entry, but providing more value to the retail customers. And this, moreover, right, the rise of decentralized exchange volume, right, has accelerated the growth of DeFi, which I would say will be one of the growing factor to look for, in the years to come in the crypto space.
I see. Well, thank you so much, Carney, for your time and your insights today.
Thank you, Hongbin.
Thank you. That was Carney Mak, who is the Chief Strategy Officer at Tokenize Xchange. This has been the Wealth Tracker with me, Hongbin Jeong.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.